The United States tech sector is currently the center of a struggle between massive breakthroughs and high-stakes corporate survival. This chart shows the scale of the workforce shift. Over 150,000 tech jobs were eliminated in 2026 alone. The highlighted segment shows the majority of cuts are tied to AI integration, marking a shift from experimental project to primary driver of displacement. Financial tech company Block provided a clear example of this shift when they removed 4,000 positions from their payroll in a single move. CEO Jack Dorsey oversaw this reduction, stripping away 40% of the company's workforce. It stands as the largest single AI-related layoff in history. While executives point to corporate efficiency, the scale of these cuts suggests a structural crisis where human labor is being stripped out of the digital economy. This instability has reached the executive suites of the tech giants themselves as they collide with legal and financial roadblocks. Meta is a primary example, currently facing a series of court battles over AI safety and consumer protection. These legal defeats suggest that software innovation has moved faster than the law can keep up. Now, that gap is inviting a wave of strict regulations that could slow future development. This view of the New York Stock Exchange floor captures the panic that led to the worst week for tech stocks in nearly a year, driven by regulatory fears and global war tensions. Cybersecurity stocks saw the sharpest decline following reports that Anthropic was testing a new AI model with the potential to bypass existing digital defenses. This market volatility acts as a stress test for the entire industry. It forces a choice between viewing AI as a sustainable gold rush or a massive financial bubble. The friction felt by corporations eventually reaches the household level. Sony provided a concrete example of hardware inflation when they increased the price of the PlayStation 5 by $150 across the US market. The company pointed to broad global economic pressures to justify the increase on a console that has been on the market for years. On the software side, Elon Musk's AI chatbot, Grok, is currently the subject of an intense debate over ethical boundaries. A Dutch court recently ordered the platform to stop generating explicit content, creating a legal precedent for AI-generated media. Whether it is a hike in hardware prices or a court-ordered content filter, the end consumer is the one paying for the lack of regulation in the tech sector. Tech leaders are moving past reactive damage control and are now actively engineering the political landscape to suit their needs. This diagram tracks a massive financial surge. A pro-AI political group is spending $100 million on the 2026 midterms to secure a deregulated environment. Their specific goal is to block strict government oversight and ensure that development can continue without federal intervention. While these political maneuvers serve corporate interests, the same technology is showing life-saving potential in the medical field. Eli Lilly is leading the pharmaceutical pivot, finalizing a $2.75 billion deal with Insilico to use AI in drug development. This is one of the largest pharma-tech collaborations in history, and it is expected to bring new medicines to market faster than traditional research methods allow. The US tech scene is a volatile battlefield, where medical breakthroughs and mass unemployment are happening in the same quarter. In this environment, the only certainty is that the relationship between humans and their tools